Okay, good morning, everyone. Let's get right into the stock market technical analysis. I want to point out a couple key things I think it's important to watch and some really important trade ideas. So, guys, drop me a thumbs up if you find value in the content. Check out my stock market technical analysis course if you're interested in learning more about this skill set. All right, link in the description below. Okay, we'll go with we're going to start with oil today. So, you can see oil futures CL. We have right now a sell signal. You can see oil is breaking this near-term trend line. However, the day is not over yet, so we do want to watch. This is a daily chart. I would be interested to see where the day closes. If this continues to sell off, we are likely going to have a near-term sell signal, and that should bring oil down to this 85.12 level. Probably get a bounce there. Not a whole lot more downside really from where we're at. That's about a 9 to 10% drop. But I did want to point that out. No real negative divergence though. So I suspect that they're going to bid this up and it's going to hold. And this is just going to merely play out to be an intraday drop where it's going to recover. Okay. DVN, same with this one. Yesterday you can see it did break my trend line that I was watching on the daily chart. Now DVN is an energy stock, and you can see this daily chart here. We've been walking up this trend line. We did get a break of that trend line, not super impulsive though. Typically I want to see a nice impulsive breakdown. Today we are gapping down and seeing some more selling. The buyers are stepping in. So I think it's really going to come down to what oil does today. If DVN can rally back up to this trend line right here and hold right in there, we might have a false breakdown. And especially if oil is, basically resting right on that trend line, then I suspect this is a false breakdown and we're going to get another leg higher. So things to watch for on there. I'm not 100% sold that this is a sell signal on this one, just with the character of oil. All right, moving on. Okay, triple Qs. I think we're going to get a short-term rally here in triple Qs and some of these tech stocks. So I'm starting to lighten up on my shorts. Now, again, this is just near term because we do have the Federal Reserve coming out tomorrow. So expect this week to be extremely volatile. There's going to be moves up and down. It's just almost guaranteed to have, moves all over the place. But short term, it looks like we're possibly going to get a move up, because the thing is that most likely the market's not going to just crash right before the Fed. At first I thought we might sell off into the Fed, but yesterday closing basically at the near-term lows. As I zoom in, you can see there's the near-term lows, and we closed pretty much at it. It's just we're not getting the price action to absolutely collapse, especially today as well. When we kind of gapped higher and we're just holding in this area, then the market's likely not going to crash or, run down and hit those lower targets before the Fed, which means that leaves open the window for a rally. And that's what we're seeing so far today. So I actually started to lighten up on shorts, and just in the short term. Now, in the longer term, after we get the Fed out of the way, I think the market will open up to continue lower. But we could, on triple Qs, trade up to this trend line right here. So this is your down trend, and we could easily rally up to that. Right now I've got it about 335 area. I could see us rallying up to there before the Fed, today and tomorrow pre-Fed. After the Fed comes out, watch out for fireworks. It's going to be all over the place. But I am looking longer term, medium term, looking for these downside targets. So maybe what we do is kind of drift up, hit that, and then work and then break down for our kind of final leg lower. That's what I'm watching for. And that's just in this move. And then after, if we hit our target here at about 299, 300, then we could see a nice solid counter trend bounce, bear market rally, something like that, up to this red line that I have, and then probably continue the bear market down. All right. That red line just goes all the way back. That's your upward price channel in triple Qs going back all the way to 2009. And that's your bull market. So that's kind of the play-by-play. If you're a long-term trader, then maybe you can just ride out these counter trend bounces and you're looking for the longer move. If you're just an investor or something, then maybe that's what you want to do. Otherwise, I'm just trying to call out, the micro bounces and where how I think the market's going to get there, because it's inevitably there's going to be strong rallies within a downtrend, and a lot of people don't have, they're just not able to ride out those counter trend rallies. Whenever the market rallies strong, they feel like the bottom's in, and that's just not necessarily true. You can have strong rallies within a bear market, and it makes you feel like the bottom's in, but ultimately they just are bear market rallies. The rallies in a bear market are always the strongest typically. So something to look for on triple Qs. I'm looking for maybe higher prices today and tomorrow into the Fed. Qualcomm. So Qualcomm today basically gapped down and opened and ran down and hit that gap fill at 139.12. That right there. So that's the actual perfect tag of our profit target. So we should expect a bounce here, and we could bounce all the way up to the 200-day moving average. That's the next objective area to short at. So if we rally up to the 200 and this key level of about 153.50, that's going to be the next area where you'd want to potentially take a short for the next move lower. And I think that's probably how I'll trade it. Look to reshort up here, look for it to run down, probably have a minor reaction, and then break and head down to our next profit level, which will be about 123.11. Coffee. So this is a commodity. Commodities are in a bull market. So we look to buy on dips or buy at support. This is Joe, a coffee ETN. We are breaking below this level of support, about 58.61. But again, I talked about how the 200-day is right below. So I suspect that what we'll probably do is run down, hit the 200-day, and then bounce back and recover this level. So that's one way to play it. You could let it run down, hit the 200, bounce back, recover, and then go long on the recovery. That would be a bullish, that would be a bear trap and a recovery of a former support that was broken. So that would be very bullish if you saw that. You could, another way to potentially do it is just start building a position now, start nibbling on it and, buy it down to the 200, but not really below, all right? If you break below the 200 and you start to break down, you really don't want to buy it beyond that. And there's another level of support right here. It's about 54.84. Definitely wouldn't want to be buying anything below the 200 and maybe stop out below that 54.84 area. So that's kind of your risk management. And yeah, this is in a bull market, but we were in a pretty strong uptrend. We obviously broke that uptrend. We're heading slightly lower. So we'll look to buy at levels of support and for this to continue in the bull market. I don't think it's going to get below the 200 for more than a day or so. If it's going to dip below the 200, it should recover that and then continue higher. Oh, one thing I wanted to point out back on the triple Qs, I forgot to cover it, is the bullish divergence. It's still intact. You can see this bullish divergence here on the momentum. And the low that we just made yesterday, as we dipped down and made pretty much an equal low, a slightly lower low, the momentum is moving higher. So bullish divergence with, as we come down and make slightly lower prices tells me that the conditions are definitely there for a rally, a strong rally. So I don't think it's time to necessarily press your shorts and be heavily loaded short. If you're longer term and you want to ride out whatever counter trend bounce might come, then I think you could do that. But again, with this bullish divergence, it just gives me a little bit of pause on this price action because it's a bullish setup. So DraftKings kind of has this bullish divergence as well. You can see here on the RSI and the PPO, we continue to drift down and make lower lows right here. We're at support basically. So this is a key, it's slightly off of support, but it's about a 3.5% off support, but bullish divergence, bullish falling wedge pattern. There is definitely the potential for a rally. Now, two ways to play this. You can buy it at this support area, or you can wait for the breakout above the resistance level. Right now I see this downtrend line right here. This was a false breakout. The next breakout, if you see it, should be the real deal, and you should get a pretty impulsive bear market rally in this thing. So that's something to watch for. Me, I'll probably wait for the actual breakout and just be a little more conservative. Facebook. So Facebook's definitely one of the most bullish looking FANG stocks. You can see here that we have bullish divergence, very similar to the triple Qs. So that just continues to remain that bullish divergence. It's on the RSI and the PPO. So bullish momentum. We have a bullish falling wedge pattern, and we're pretty much right there at the apex. So I don't know, it's kind of set up right now for the Fed, for whatever the Fed says to be bullish, and us to potentially get that breakout on the Fed. They might even break it out before. But that's definitely the setup right now, is a bullish break in these FANG stocks and a potential rally. Not in all of them, but definitely Facebook. And it's sold off quite a bit. Here's Apple. Apple's below the 200-day moving average, so it's likely going to chop around and battle with this 200 a little bit. We do have a support line right here on Apple, and you can see that we have lots of reactions on this support line, and we're basically, not quite there, but almost there. So there is support right underneath Apple. If it wants to hold that support, then we could see Apple just kind of tread water while Facebook and maybe some of the weaker FANGs rally, making the triple Qs rise. Gold. Okay, so gold is breaking down. This is gold bullion. We talked about how yesterday it was sitting right there at support, and it looked like the area where it should hold. I mean, it is support, but today, and really in the after hours, it broke that support and it's heading lower. So this makes a lot of sense to me, actually. And one of the reasons why I had pulled off some of my larger mining positions just temporarily, I was looking for a potential backtest of the breakout point. So again, if you remember, we had this asymmetrical triangle right here coiling. We did get the breakout, so gold is bullish. But usually when you get that initial pretty impulsive breakout, I mean, the thing ran up, it was going parabolic, then you're going to see a pullback or a backtest of that breakout point. And that's a very objective area to buy right down in here. So if gold can continue to drift a little bit lower, about a 3 to 4% drop from here, then it's going to be a very objective area to go long on gold and the gold miners. So that's what I'm looking for, just a little bit more downside. Maybe we get there right after the Fed. Maybe gold dips right after the Fed. We hit our support line, and I'll be a buyer down here on this backtest of the breakout point. From there, gold should continue higher, going on to make all-time new highs, and it just should continue. So that's what I like about gold. It's a very nice setup to see it come back down, and I'm looking for areas to buy the dip within the miners as gold continues to sell down. Okay, I've been kind of scanning around, and just the point I want to make, my conviction's not very high right now on market direction, and that's, I think, to be expected. We're right before the Federal Reserve with a big announcement, and we've had big downsize moves. So once I've been calling for the short in the tech sector and a lot of these other stocks. Once they start to work out and start to play out, the closer you get to the targets, especially right before a big event like the Fed, just the lower conviction and lower probability that we're going to have. That's just the nature of it. So I want to point that out. I don't think it makes sense to be super heavy any one way right before the Fed. I typically like to lighten up, let the Fed kind of do its thing, get that out of the way, and then we look to get back into trades at key levels. So, all right, guys, I'm going to wrap up here. If there's anything else that comes out by the end of the day, I'll put out another video. Otherwise, I will likely put out a video after the Fed. Okay?